Happy Monday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Asia, Europe, and North America. My name is Tony. We have a big episode. There is a lot to cover, so let's jump in. And first up, US President Donald Trump has announced plans to sign an executive order mandating that Americans pay no more for prescription drugs than the lowest prices available globally, a move that has already sent shockwaves through global pharmaceutical markets. In a post on Truth Social, Trump said that he will sign an order at 9 a.m. Monday in Washington, a few hours after this video goes live, describing it as a most favored nation pricing strategy. The measure, he claimed, would slash US drug prices by 30 to 80% and, quote, bring fairness to America, end quote, by ensuring that Americans are no longer subsidizing cheaper drug costs overseas. Quote, healthcare costs in the US will be reduced by numbers never even thought of before, end quote, he added. The announcement sparked a sell-off in Asian pharmaceutical stocks on Monday morning. In Tokyo, the Chugai Pharmaceutical Co. tumbled as much as 7.2%, the Daiichi Sankyo Co. and Takeda Pharmaceutical Co. down roughly 5%. South Korean firms Celltron Inc., SK Biopharmaceuticals Co. and Samsung Biologics Co. dropped more than 3%. In Hong Kong, Beijing Limited and Hutchmed China Limited fell by up to 8.8% and 5.6% respectively. Even companies with no current US exposure, like mainland China's Jiangsu Hengrui Pharmaceuticals Co., saw shares drop. North American firms will likely follow suit as markets open today. Citigroup analyst Hidemaru Yamaguchi called the announcement, quote, negative for the sector, end quote, warning that companies with high US revenue exposure were particularly vulnerable. Stephen Baker of Jefferies noted that Trump's approach mirrors a proposal from his first term, which aimed to align Medicare drug prices with those in 22 developed nations. That earlier initiative was blocked in court following legal challenges by pharmaceutical firms. Trump's new push revives a long-standing effort to lower drug prices, building on current legislation enacted under former President Joe Biden. The Inflation Reduction Act of 2022 already allows Medicare to negotiate prices for select high-cost medications. However, Trump's plan may extend the reach of those pricing mechanisms by executive action, though it remains unclear whether it will apply solely to Medicare and Medicaid or more broadly to private markets. Industry leaders have long argued that US drug prices, the highest in the world, are essential for funding research and innovation. Slashing revenues, they warn, could stifle the development of groundbreaking therapies. Trump dismissed this argument, saying Americans have been unfairly subsidizing other countries' healthcare systems. Quote, the suckers of America have borne the cost for no reason whatsoever, end quote, he wrote. The feasibility of enforcing a most favored nation pricing model through executive order remains uncertain. Analysts like Evan Segerman of BMO Capital Markets cautioned that the US government currently lacks authority to impose pricing controls on the commercial market. Any broader implementation would likely require legislation, a difficult prospect in a divided Congress. Still, with Medicare and Medicaid accounting for as much as 40% of US drug purchases, the move could have sweeping implications. Even the threat of a pricing overhaul has already wiped billions off the market value of major pharmaceutical firms. As Trump moves forward with his plan, drug makers may find themselves facing renewed pressure, both politically and financially. Next up, we move now to Japan. Japan's economy likely shrank in the first quarter of 2025, reflecting a worrying loss of momentum even before US tariffs began to take effect. According to a US-based Bloomberg survey of economists published today, Monday, real gross domestic product is expected to have declined by 0.3% on an annualized basis from the previous quarter, marking the first contraction in a year and exposing vulnerabilities that threaten both economic stability and political prospects. The expected dip in output underscores weak domestic demand and faltering exports. Economists flagged stagnant consumer spending and a reversal in the net export boost seen late last year as primary contributors. Elevated inflation continues to suppress household spending, with real wages stuck below pre-pandemic levels for much of the past 3 years. Quote, there's no engine to drive Japan's economy at the moment, end quote, said Yoshiki Shinke, senior executive economist at Daiichi Life Research Institute, adding, quote, this is even before the Trump tariffs hit. I see a good chance of another quarter of contraction following right after. End quote. A second consecutive quarter of decline would push Japan into a technical recession and present serious challenges for Prime Minister Shigeru Ishiba, whose approval rating has dropped to their lowest since taking office in October. Political pressure is already mounting for a fresh stimulus package ahead of the summer upper house elections. Meanwhile, the Bank of Japan is likely to maintain a cautious stance. The central bank recently delayed its forecast for reaching a stable 2% inflation target and halved its growth projection for the current fiscal year. Market analysts from Goldman Sachs and Barclays now expect any rate hike to be delayed until 2026, or possibly reversed. Adding to the gloom, major exporters like Toyota are bracing for further damage from US tariffs. The automaker forecast a 1/3 drop in profits this fiscal year, citing uncertainty about the trade outlook. Quote, "The details of the tariffs are still incredibly fluid, so it's difficult to take steps," end quote, said CEO Koji Sato. With Japan's potential growth rate at just 0.6%, the lowest in the G7, even modest shocks can tip the economy into contraction. As UBS's Masamichi Adachi noted, quote, "Japan is having its own version of stagflation. The Bank of Japan may even need to consider rate cuts by year end." End quote. We are certainly living in interesting times. The world is going through tremendous change. If you want to be on top of the most up-to-date and salient developments related to the economic and financial fallout of all of this, make sure you're subscribed to Market Update, hit the bell notification icon, and you will be. If you're getting some value from today's episode of Market Update, don't forget to hit the like button. Next up, the final update is technically geopolitical, but like much in geopolitics, it has significant economic implications for the continent and the world, and so we will cover it here. Ukrainian President Zelenskyy announced late Sunday that he is prepared to meet Russian President Vladimir Putin in Istanbul this Thursday for direct peace talks, responding to pressure from US President Donald Trump and an ongoing impasse over a proposed ceasefire. Quote, "I will be waiting for Putin in Turkey on Thursday, personally," end quote, Zelenskyy said in a statement, framing the invitation as a test of Moscow's sincerity. He added, quote, "I hope this time the Russians will not look for excuses," end quote. The announcement follows Ukraine's call for a 30-day unconditional ceasefire to begin Monday, an appeal supported by European leaders but met with resistance by Moscow. The Kremlin responded with its own proposal to resume peace talks in Turkey without halting combat operations beforehand. President Putin resumed military actions in Ukraine shortly after offering talks, casting doubt on Russia's commitment to de-escalation. Zelensky's decision to attend the talks came after US President Donald Trump urged Kiev to, quote, "agree to this immediately," end quote, citing Putin's openness to negotiations. Writing on Truth Social, Trump said, quote, "At least they will be able to determine whether or not a deal is possible. If it is not, European leaders and the US will know where everyone stands and can proceed accordingly," end quote. Trump also expressed frustration with what he described as Ukraine's reluctance to strike a deal. The talks, if held, would mark the first face-to-face meeting between Zelenskyy and Putin since December 2019, when they met in Paris under the mediation of French and German leaders. Those discussions and subsequent rounds in 2022 in Istanbul failed to produce lasting results. The Kremlin's current stance appears to reinforce long-standing demands, including Ukraine's pledge of neutrality, a ban on NATO membership, recognition of Russia's 2014 annexation of Crimea, and 4 additional regions seized during the war, and the end of Western military support for Kiev. Russian officials insist that talks must first address the, quote, "initial reasons," end quote, for the war before discussing any ceasefire terms. European leaders have been unified in backing Zelensky's ceasefire proposal. The leaders of France, Germany, the UK, and Poland all travelled to Kiev on Saturday to show support. Whether Thursday's talks in Istanbul will proceed, and if they yield progress, remains uncertain. But Zelensky's readiness to engage underscores a diplomatic opening, albeit fragile, as Ukraine presses for a halt in hostilities and the international community monitors Russia's next move. Okay, that is today's episode of Market Update. Thank you so much, everybody, for watching. Have a good Monday, have a productive week, and I will see you all for a new update tomorrow.